Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. We have a lot to talk about today, and it's mostly going to be focusing on the big news today, which is about real estate in the U.S. We're going to talk about the U.S. market, how real estate is really impacting the economy, how things are changing dynamically, how things are also being impacted overseas, and we're going to tie it back into crypto all today. We're going to talk about this event a little bit too, because, real estate, right? That's part of it. So we're going to talk about that as well. I'll put there'll be a sponsor ad in the middle, but I'll keep it short. But let's just jump right into it. So let me share my screen, and I've got a few let's see, share screen. Come on now. There we go. Okay, so a couple of stories, mostly from CNBC. The big news that came out today, this was expected: home prices, and home sales. Home prices cooled in July at the fastest rate in the history of this index. So scrolling down this index, I'm not going to go over to the details. I highlighted it as much as I wanted to talk about. Let's try and zoom this in a little bit. Here we go. Zoom. All right, that's a little better. Okay. So U.S. home prices cooled in July at the fastest in the history of this index, according to the report released Tuesday. Home prices in July were still higher than they were a year ago. They were looking year over year and month over month, but they cooled significantly from June. So it's from June to July, slow. This is July numbers. So the prices from last July went up 15.8%, but below the 18.1% from June to June from last year. So it's still 12 months that they're looking at. But it's clear. It's like July's report reflects a forceful deceleration. The 2.3 percentage point drop difference between these two monthly rates of gain is the largest deceleration in the history of the index. Basically, the market's cooling off pretty rapidly. Another recent report from the National Association of Realtors showed some home prices softening dramatically from June to July. Prices usually fall during that time due to the strong seasonality of the housing market, but the decline was 3 times the average decline historically. Again, things are cooling off quickly. The shares of homes that were with price cuts reached 20% in August. That means houses on the market right now in August or last month that they had records of, the prices of the houses were cut at least once from the initial listing price for all the houses that were available for sale in August. So that means people are listing houses in June or July, cutting the price again in August, hoping to get a sale. For homeowners planning to list the property for sale, today's market is significantly different than the one from even 3 weeks ago. Home prices are dropping because affordability has weakened dramatically due to the fast rising mortgage rates. I'll get to that in a moment. The average rate in the popular 30 fixed mortgage started this year around 3%, but by June had briefly surpassed 6%. It remained in the high 5% range, and this is for excellent credit. 5% throughout July, and is now edging towards 7%, making the average monthly payment about 70% higher than it was a year ago. That's for probably principal and interest, maybe some taxes too. As the Federal Reserve continues to move interest rates upward, mortgage financing has become more expensive, a process that continues to this day. Given the prospects for a more challenging macroeconomic environment, home prices may well continue to decelerate. And as I mentioned I think it was last week, Fed Chair Jerome Powell said that prices have to come down. So speaking of mortgage rates, I pulled up today's mortgage rates, and this is for an average score. I just picked the average state, 7.5 mortgage rate, right, for a good credit score of in the 700s. And this is so good credit. Your mortgage is at 7.5%. So doing the math, 7.5% is about $7 per $1,000 you borrow. Meaning, if you have a $100,000 mortgage, your payment is now $700 a month. If it was at 3%, it would be 6% is 6, 4.5% is 5, 3% is 4. So at 3.5%, at 3%, it would have been about $400 a month instead of $700, and that's on a $100,000 mortgage. It only scales up. If it's a $300,000 mortgage, you're looking at $1,200 versus $2,100. Yeah, that's how they get that 70% or more. So you went from a $1,200 monthly payment on a $300,000 mortgage at 3%. Now that same mortgage payment at the same price, well, the same mortgage, same amount borrowed, would now be $2,100. That's an extra $900. That's 75% more than that $1,200 payment. That's bad. That means prices to be equivalent, prices have to come down. Prices have to come down probably like 40% or so to really balance that out. Quickly on other fronts, the UK talked about this yesterday in the video. UK lenders halt mortgage deals due to customers after market chaos because the bonds and the price of the pound sterling versus the US dollar was dropping so rapidly. The market was in very tumultuous, very dynamic, very heading downwards. So the lenders just stopped doing mortgage rates because they didn't want to have like lenders, like banks. The banks will create a mortgage for people and they'll lock you into a rate, but then they sell that mortgage on a secondary market. Well, what all the market chaos was saying was that they're not going to be able to sell that mortgage. So they don't want to make a new mortgage. They don't want to create that. They don't want to take on that extra risk. Now, China, and I'm going to have to refer to my notes here. So hang with me. But this video that came out about the Chinese real estate market, it's a troubled market. And so China home sales and property investment plunged in year-over-year August data. I'm not going to go. The story is not even existent. You had to watch the video. So I'm just going to speak to it. And I'll do it from the side here. And then I'll bring everything to a close. So in the video, it says the home sales in China were down 30% year over year. Prices were down 1.3% year over year. So it's 12 months. Property investments were down 14% year over year. And Citi, a lender in there, which we all know Citi is a major bank, they said nearly 1/3 of mortgages in China are now classified as bad debt. The China government, to stimulate real estate, is cutting interest rates, ordering banks to offer reasonable financing for developers, and targeting incomplete housing projects with over 200 billion yuan in special loans. And last point of that, real estate is roughly 25% of the market, of the gross domestic product for China. So what does that all mean? And I'm going to talk about one more story in a minute about bringing this back to crypto and all that. But first, before I get all into my analysis, a word from our sponsor. Hey everyone, I'm really excited to announce our first special speaker at the Economic Preppers event in Dallas on October 8th. It's I'll share my screen and announce it that way. It's none other than Bill Noble of Token Metrics. Now, Bill, if you're not familiar with him, you should be following him on Twitter. Bill used to work for Goldman Sachs, Charles Schwab, Morgan Stanley. He left all that legacy financial stuff behind a few years ago. Then he joined Token Metrics. He's the host of the Token Metrics YouTube channel, where they do a lot of crypto research and a lot of discussions. But Bill, he's going to be speaking. Here's his Twitter. He's going to be speaking at the event, and he's going to be there pretty much all day. I mean, he's probably going to show up Friday night as well. But he's local to Texas. Hope he brings out a few friends from Texas. But if you're a fan of Bill or Token Metrics, come on out and listen to Bill. He'll probably be speaking around lunchtime, and then he's also going to be a part of our panel for the AMA. So, and again, if you want to attend and you can't be in the Dallas area, we'd love to see you live. But if you can't, go to economicpreppers.live. Just follow the link below here. And there's virtual tickets too. So it's live is $197 and virtual is $150. We're making it very easy for you to attend. You can get the live stream. You get the workbook in a PDF form if you can't attend live. We hope to see you in Dallas in one way or another. And we're looking forward to Bill and the rest of us talking to you soon. All right. So again, you got the ticker going across. We got the event. I don't want to promote it too hard, but obviously we have to because it's only a week and a half away. So please get your tickets now. We'd love to talk to you either live or virtually. But to go back to what we're talking about this video, I'm going to share my screen one more time and talk about the final story. Well, before I do that, okay. Real estate is a major impact to economies, both in the UK and China, and the US. That's a huge amount of wealth. It's probably the biggest investment that most people make in their lives. When people are saying that the prices of real estate need to come down 30, 40% because mortgage rates are going up too high and banks don't even want to loan, that's concerning for everyone. So where is this going to head and what does the future of real estate look like? Well, first off, we're going to have to rebalance this. Like the mortgage rates of 3%, they're gone. We may not see them for a long, long time, if ever again. So now we're at the 6 to 7.5% rates. Prices have to come down because people can't afford the payments based on that new mortgage number. But when all this settles out and this is just another part that's falling off the plane as it's flying and trying to land. the financial system is crumbling around us, and that's why we're getting prepared with like talking about things at our event with real estate, gold, silver, and crypto. But to bring it to crypto, let me just share my screen one more time and talk about this event. I'm not going to talk about this particular article is what I want to talk about. There's lots more I could talk about real estate and cryptocurrency. That's probably another video. That's for another time. But I wanted to share this one. It's a recent story about crypto real estate. That's where things are heading, like recording deeds on the blockchains and doing title work and selling properties for crypto. Here's a story from this month, and I will link this one in the description so that people can get it. It's from Financial Times, and the first half is basically a human interest story about buying crypto, but it's a good graph about how many people have various Bitcoin, a percentage of people in wallets and various sizes. But the meat of it starts halfway through. So while some Web3 savvy investors have dabbled in buying virtual properties in the metaverse with their crypto funds, many would prefer their digital wealth to translate into their physical lives. This is just, again, a story about how the volatility of the course of a transaction that they were following. These investments are for the next 3 or 4 years, not in the next 3 or 4 days. So the people that are buying homes and real estate and transacting in Bitcoin, they're not worried about the price volatility in the short term. They're more worried about acquiring Bitcoin in the long term. So they want to sell real estate at a high and get Bitcoin at a low. Here's another one. Here's another story. There's a lot of different endeavors in the blockchain for real estate, and there's a lot, and I need to do a video on that again. Talk about property, talk about how to translate your silver and gold into crypto and buying real estate, and how to transact that on the blockchain. Eventually, deeds will be NFTs on blockchains, all that kinds of thing. And I'm talking way too fast, and people aren't going to get half of it, and I'm sorry, but I try to keep these videos short. Let me just talk about this particular real estate person, and Christine Quinn. She's a realtor, a star on a Netflix show that I've never seen called Selling Sunset. Whatever. There's 100 real estate there's thousands of shows. But in April, she saw the opportunity. She created a company called Real Open, which lists properties and brokers transactions for would-be crypto buyers. She said people are ready to diversify more than ever more than they ever were before because of uncertainty. Uncertainty actually creates hype and then creates sales. So she's looking to differentiate her market by doing crypto instead of just doing the traditional method. But also the U.S. market it's ripe for this to be disrupted in this industry. Another industry set to be disrupted is real estate. In June, PMG, a national real estate developer, began accepting cryptocurrency for all condo sales in the U.S. Let's see, they got a first deposit in crypto last year, construction deposits for more than 70 condos, and so on. So for buyers who want to hold on to their digital currency, Florida startup Milo is offering US dollar loans guaranteed by crypto collateral. Milo has lent some $10 million in mortgages backed by its clients' crypto holdings since April, that would be of this year, ranging from $150,000 to $3 million per loan. If the value of a client's collateral falls below 70% of the loan to value, there could be a margin call triggered and more collateral must be pledged. So much like with Nexo or with other things, let me drop out of here. So much like Nexo and Celsius for a while, there are going to be more and more platforms that are developed out there. You can take your crypto and borrow against it. So we're going to be getting into asset-backed loans, asset-backed transactions, and moving from assets like silver, gold, and Bitcoin and real estate into other assets. And then last night on a Twitter space, and I'm going to try and post a link to it up here. But I was on with Miggy Crypto, and Patrick and Dylan and I were on there talking about this. And we talk about assets, and we talk about this in articles that we've written before and that we will share with our community if you join with us on the Patreon level, which again, we have another Patreon AMA tomorrow night at 8 on Wednesdays. We always do it Wednesdays at 8. Just the night that we chose that made sense. But you can always submit questions beforehand. But in any event, assets are going to be what people are going to be using to store their wealth. You work, you get paid, compensated for that labor in some way, shape, or form. Typically, it's been with fiat currency. You don't have any laying around right now, but I'd show you. But basically, you get currency that gets deposited into your bank. People and banks want to keep it there, because that is the most taxed way to get paid. That is the most devaluing type of currency that's out there. the best method and what the wealthy do. You don't need to take your advice from me. This is all not financial advice. It's just my opinion, just my thoughts. But the wealthy take lessons from people that are already wealthy. What do? They rarely take income. They take compensation in the form of assets. They hold their wealth in collectibles, gold, silver, cryptocurrency, real estate, all those different things. Most people that have gained most of their wealth, like the upper 1% of the United States, all built on the back of real estate. More and more that's starting to happen with crypto, and they preserve their wealth in gold and silver. But real estate, there are so many tax advantages. There's so many advantages of getting holding assets instead of holding currency, because currency loses value. Assets have the potential to gain in value over time, not necessarily tomorrow, but years from now. They will more than likely hold their value or even exceed their value, versus the currencies that are being deflationary, and well, thanks to inflation, all the currencies are just losing their buying power day after day after day. So before I ramble anymore, I'm going to link as much as I can in the description, include that article about the real estate, because that's going to be a very interesting topic going forward. We're going to be exploring more real estate and crypto and recording things on the blockchain, and also asset-backed loans. That's going to be a big thing going forward too. But with all that said, I want to see your comments. What are your thoughts? Do you want to see more stuff about real estate and asset-backed loans, and how it all ties to crypto, and how assets are the way to potentially store your wealth in the best manner possible? I'd love to read your comments below. I love to hear about it. What are you doing to store your wealth? What are you doing to store your value? I love to read. I read every comment, and I try to respond to everyone, unless it's a bot, but I ignore those. But for the most part, I read everybody's comments and reply back in short term. So I love to hear your comments. I love to read them. Looking forward to it. But for all that said today, I'm going to close the drawer in the bureau, say follow leader one more time, and I will talk to you soon. Take care.